And we are live. Okay. My name is Jessie Rancourt of Jessie Opportunity Cost Investing, and I have with me the Honorable Adam J Mead of Watchlist Investing, the Oracle's Classroom, the ultimate financial guide to Berkshire Hathaway, the book that I have behind me here. Adam, how are you doing today?
I'm doing great, Jesse. Thanks for setting this up. You're the high tech
Thank
guy. I'm just low tech. Get my newspaper in the morning, but you're getting us out there on the interwebs here. So this is wonderful.
Yeah, as best as I can. All the credit really goes to my brother, but I'll take everything you'll throw at me. I'll take the boost in self-esteem. So Adam and I decided to have this conversation with everyone. We have a live stream going. We have a private chat. We can see it's live on YouTube, so we can watch the comments stroll in on YouTube. And as you can see, we're already having technical issues. My painting just fell. But Adam and I are just going to have a casual conversation talking about how we started an investing firm and what made us decide to do the crazy thing that is investing for other people. And I think I'll just start off with talking about how we met, because it's a crazy story that involves me being bored at work and Adam just not knowing what was coming for him that day. So I am an air traffic controller. My background's in aviation. And before I became an air traffic controller, I was working as an aviation consultant at a firm. And it was a really slow day. I was doing some kind of Excel spreadsheet kind of work. And I was coming across the Berkshire Annual meeting of 2018, I believe. And the very last question that was asked was by the gentleman named Adam Mead of Mead Capital Management. Adam, do you remember that question at all? I don't remember off the top of my head.
Oh, what the question was to Buffett? Yeah, it was on Berkshire Hathaway's incentive arrangements with managers. How to incentivize and motivate the managers across the different businesses and industries that are under the Berkshire Hathaway wing.
Do you remember the answer he gave you?
Well, he said it was a good question, which made me feel good, but that's classic Buffett. Munger quickly chimed in and said, hey, basically, he's not going to answer that. But I've since over the years and actually writing the book, going through all of the annual meetings, literally the PDF and every single minute of video that's out there. He's touched on this a couple different times, so I won't, I've talked about it, but he's put out a good number of things on incentive comp and structures and stuff. And it's, of course, simple and brilliant, but yeah, it was really cool. It was the last question of the day, just squeaked in there. And I try every year to get up there at the microphone, but you don't always get it.
Was that your only question you've been able to ask Buffett?
It was, yep, through the annual meeting. Yeah.
And you've been going for 11 years?
Well, I mean, there's an asterisk there because of I've got every single pass up here behind me. Those are every single pass to the meetings that I've been to. So my first meeting was in 2012, and I've gone every single year since. And I guess I can count with the asterisk, going to the meeting
In 2020.
the last 2 years with virtual.
Yeah, that's cool. I remember sitting there listening to your question here, and I thought, wow, that was a really good question to ask. In fact, it was too good because, as you said, Charlie Munger just said, we can't give you that information. But I actually noticed that in your latest Watchlist Investing email you sent out, you said, this is what I suspect it to be. Isn't that right?
Yeah, and again, it varies across businesses, but there was so yeah, I've got a bunch of different things going on here, but I have watchlistinvesting.com, which is, I have both a Substack free email chain, which I think you're referring to, and then I have a monthly paid analysis newsletter where I do deep dives and stuff. But in the Substack one, someone had asked a great question on YouTube, and I actually went through and I did the math as to how I think it works, because Buffett at a couple times had said, not just the incentive in terms of, earnings, right? But he said, we incent our managers to reduce the capital that's employed. And I said, well, how does this actually work? And so I walked through the math, and it's pretty straightforward, and it's a great incentive system to be a win-win, for the manager and for Berkshire, because it gets capital back and basically earns the same amount of money.
Definitely. I highly recommend people subscribe to your watch list investing. I'm learning something new every time. I really like that last one. But anyway, so I was listening to this and I heard Adam speak his question. And at the very beginning, I remember thinking, wait, he said Derry, New Hampshire. And Derry, New Hampshire was about 15 minutes away from where I lived. And I don't know what urge came over me, but I decided that in the pursuit of trying to figure out what the heck finance means, that I was actually going to reach out to Adam. And I don't even know what I was going to talk about. It was just another person who liked Warren Buffett. As you can imagine, like growing up and going to college for aviation, there wasn't a lot of people talking about finance. They were all talking about aviation. So when I found this hidden interest in me by accident of investing and the like, I really was happy to find someone really close by who liked Buffett enough to go to the annual meetings. So I did as much research as I could about Adam, and I found out that he was, I stalked you. I'm sorry, Adam. I looked for everything you had online, and I was like, wow, this is a wonderful person. I'd love to meet him. So I ended up cold calling you. I think I reached out on LinkedIn or something like this and say, hey, can I get you lunch? And yeah, we had lunch, and it was amazing. I loved it. I found out how much of a Charlie Munger nut you were, which I super appreciate, because it's a crying shame that not more people know about Charlie Munger. I think he is one of the most underrated billionaires out there. But yeah, I mean, you were such a great guy. You even ended up paying for my lunch too. One of the greatest compliments he said is like, it's like looking in a 10-year mirror back. It's just kind of funny to, hear that and say, oh, wow, like if Adam's here and like I'm 10 years beneath him, like I'm clearly doing something right. But that's essentially how we met. We've kept in contact every now and again ever since. I found out Adam was working on a project, which at the time I knew was him writing the book that you have behind us here. I just had a good guess about it because when we were having our lunch, you said you were working on it. So I reached out and said, yo, if it's involving Buffett, I'd love to do it. And I helped. My part was very, very small. I mean, I just did spelling and grammar essentially, but I got to see more of Buffett, and I went line item through line item. I tried to give him everything I got, and he produced the book, and it turned out to be a huge hit. I think it's #1 bestseller somewhere, right?
Well, yeah, and of course, Amazon has so many categories that it's like, #1 bestseller in, Berkshire Hathaway books written by Adam Mead in 2021. But no, it's thank you.
Yeah.
It's been doing well, and we have Chinese and Korean translations coming out, and we've got next month it'll be published in English, but in the Indian market. So it's great. Yeah, that was a good lunch. There was T-bones. I think you told me about your book. But I know like people tuned in to talk about how to copy, well, you and me, but really you're getting off the ground here, Jessie, which is sort of a good segue into how does an air traffic controller become interested in investing, and how'd you start
Yeah.
investing and all that?
Yeah, I got to ask you too, because we've never gone down that rabbit hole, how we even started investing. But yeah, I'll talk about that. And hello to Andrew Lopez and Richard Hopkins, two incredible people we have piling in over here. So nice to see you're tuning in. How I started investing and how I got an air traffic controller is actually the same concept. I was just in the pursuit of value, and it just so happened that I stumbled upon one path and then the other. So when I was growing up, I grew up really poor, and long story short, found out that air traffic control was a wonderful job that made $200,000. You work 4 hours on, 4 hours off in a day. You get all the government benefits. The pension was great. And growing up poor, I thought, wow, I would be able to support myself. The only problem was you at the time had to go to college. And I said we grew up poor. We didn't have the resources to go to college. So I got the resourcefulness. I learned everything I could about Buffett and investing in business, everything from Think and Grow Rich to Business Adventures to everything written by Mary Buffett and then Alice Schroeder, who I'm reading more and more about every single day and falling more and more in love with her work. So that's essentially what happened to get me on the track of both aviation and finance. Finance is wonderful because it's a skill that you can carry with you in any career field. And I got so good at it that I was able to pay off my undergraduate and my graduate degree before I even graduated college. And from there, I was just teaching people the things that I learned, and just making sure that I could provide a better life for my family when it comes my turn to have kids. And it just evolved more gradually into what it is today, and that is value investing. So how I decided to start investing for other people was just a way of following the path down continually. So that's it.
Nice. That's great.
Thanks, man. All right. So how about you? How did you get started in investing?
Yeah, gosh. I grew up in a family of small business owners. My grandfather had a tree service business. My father had a trucking business, and he actually rode the housing boom up and then went bankrupt. So awesome lessons. I mean, really like up close and personal lessons. I mean, I sold firewood in high school, and then I had a little welding business in college. So I've always been sort of around business, and anybody who spends 10 minutes in business, is going to bump into Warren Buffett, right? So I just I found him, and it was just, uh, here we are today. But yeah, I think I opened my first brokerage account when I was like the day after I turned 18. Um, and just haven't looked back. It's hard to believe how long it's been. Um, Made a lot of mistakes along the way, and just kind of kind of like you. It's like one thing led to another, and had some people ask me to manage their money. I was working at a bank at the time, and I said I want to do this above board, do it right, and started the firm, got registered, all of that while I was working at the bank. Told the bank about it. Um, but I did it legit, So I guess just sort of like a little sidebar tip, note, highlight, whatever. You can do this part time or get it started while while doing your main thing. It doesn't have to be a hard break. And I mean, I think you're going the same route that I went, Jesse, with separate accounts. When I looked into starting a hedge fund, it was like, oh my gosh, all these startup costs, the administrative, $20,000 audit every year. Going the separate account route just drastically simplifies things.
Absolutely. I don't know what it was, whether it was the hedge fund trauma that was happening, and the Robinhood and no, the GameStop debacle that was going on. But I was recommended a course by Bridger Pennington, guy on YouTube. He talks all about funds and how you can start a fund for pretty much everything. And I thought the concept was really fascinating. I was attracted to it right away. It clicked with me. And I took his course and I started reading the information. And like you, I said, well, maybe not like you, but I said, I'm too shy to go reach out to really rich people I don't know and say, hey, I'm one of the dying breeds of value investors. You want to invest money with me? What's your track record like? Well, I have this Vanguard stuff. And they're like, nah, you need to be investing other people's money. That's the way I felt. So I thought that the investing for other people's accounts. Also, there's the regulation about having certain classes of investors. I just didn't know enough rich people, and I wasn't resourceful enough to make anything marketable yet. I think my plan right now is to build this up, see if I have merit in this, and with friends, families, and fools, as I guess the industry lingo, and figure out if this is something I am able to provide value to for other people, and then scale it up from there. Yeah, really excited.
Have you, just sort of following this train of thought, have you looked into or heard of these emerging manager programs or funds? Have you heard of anything like that? There's
You
this
talk
great,
about incubator hedge fund?
what's that?
Incubator hedge fund at all?
Yeah, like sort of like incubators, but there's some that take a piece of the quote economics, which means they buy into your fund, and then they want you to scale and so forth. There's others. If you haven't seen it yet, come across it, Jesse. This guy in MIT, Joel Cohen. Do you know that name? Um,
Uh, Don't know it off the top of my head.
He works for MIT investment management, and he basically they outsource to managers, but they will take they don't buy into your fund, but they become an investor in your fund. But they're very different in that they're okay with this idiosyncrasy or it being, very different. In other words, one man shops,
Mhm.
super concentrated and so forth. I looked into it, full disclosure, they turned me down, but just for others that are looking, look into these things. Don't sell your soul to get the thing up and running. And just as it
Yeah.
relates to that, Jesse, Joel had asked Twitter. He's pretty active on Twitter. He had asked, what are your overhead costs for your fund, just to sort of do like a little survey. And I added all mine up, and I think it was about even being generous on some things. I work from home here in my office. It was like $4,000 a year,
Mhm.
ongoing operating costs per year. That's insurance, professional liability insurance, the FINRA fees and stuff like that. So I think we took slightly different paths. I did a lot of my stuff myself, but you hired a lawyer. Is that correct?
Yeah. So I started doing everything, and I realized that the things that I didn't know were important enough for me to go get help on that. And I still came to them with everything I thought I needed, and they still said that it would be best. I mean, if you ask a barber if you need a haircut, obviously they're going to tell you. But I tried to rationally um, think about whether I really needed them or not, and I felt like I was still out of my circle, so I had to. So I've written down every single cost there is, and I think it's probably totaled. I actually have the Excel sheet right here. Probably close to $21,000, $21,000, including the Series 65 and the course I took. But that's essentially the route, is doing it with the attorneys and having that insurance that I know that what I'm doing is correct. So yeah, I think I did it a lot harder than I had to.
No, I think you were right to especially working full time and all of that to get the outside help. I kind of cobbled it together. I wouldn't say cobbled it together, but um, I'm someone who likes to know exactly how things are done, even if I don't do them. But that also often leads me to doing them myself. So I created my own contracts, my
Mhm.
own policies and everything. And I don't know. I'm registered in New Hampshire, but you have to submit everything to the state of New Hampshire when you're state registered. And
Mhm.
had a couple things in my contract that the state attorney, top securities attorney, said, hey, you might want to change this. It's got a little hedging clause in here or something. But
Mhm.
and like I was telling you before we went live here, as long as you're not a crook, I mean, they're going to work with you.
Yep.
Your intent is right. But where are you domiciled, Jesse? Are you Virginia based?
I am Virginia based. Yep.
Okay.
So slightly different, but it sounds like the root's still the same. I've written down, for the people who are watching this, I've written down the entire process as I've gone along, and I've written down every expense as it goes along. My hope is that in the future, we'll create a video to show how you can do it pretty much the way Adam did it. The way I should have asked Adam, how did you do it? That would have saved me so much time and money, but maybe I was a little too shy, or maybe I just didn't think about it. But it sounds like the process was the same. I went to them with every document, and they said, we want to change it. And it looks like it was only changes just in the literature. But there were some things I messed up, and I'm glad to have them for that. So I think I
That's
felt like state exempt when I shouldn't have, because I thought you had to work up to non-exempt. So like Adam said, you just kind of file the information, and then the SCC gets back to you, and that's what's happening right now with me. So I'm not registered yet, but I'm in the process.
yeah. That's so. What you said about 22,000 to get up and running.
Mhm.
Yeah, and then so your ongoing costs will probably be pretty close to mine, I would imagine, because you're not going to need that attorney going forward. Like a lot of that was one-time expense, correct?
Yep, yep.
So I have a friend. I don't know how it is in Virginia, but I have a friend in Minnesota, Andrew Wagner. He's out. He's a
Yeah.
little bit shy, but I try to keep telling him he's got to poke his head out and come out here on social media. But anyway, so Andrew, in Minnesota, you have to, for the first 3 years, you were required by the state to hire I almost said compensation consultant, to hire a compliance consultant.
Interesting.
For your business. If anyone's out there and is in Minnesota or another state that does this and loves compliance, like this would be a fantastic business to get into because you have to pay them.
Right.
And so anyways, just sort of a little difference there. You'll find, I think, and I'm sort of speaking to the audience here, but I mean, you'll find different states are different in terms of how they're structured and securities laws and so forth, but they're all pretty much the same. And you know, the Series 65 and actually now you have to take, like, what is it called, like SME, like Securities Essentials first, or can you go straight to the 65?
I went straight to the 65.
Okay.
But one thing I found out that was new as of like last month or something, maybe, is that you have to do a virtual orientation. So I had to sign up for, like, in November, I have to do some kind of virtual orientation where they can be like, welcome to being an IA, and here's what you need to know going forward, like the fees you'll have to pay and stuff like this. So that's a little new, and I was like kind of disappointed I had to do that. But hey, we'll see.
And one thing I just saw somebody was talking about on somewhere out there was talking about like continuing education credits. I don't think you I mean, I haven't been doing them, but I don't think you have to do anything like that if you're state registered or not part of a larger organization.
Yeah, I haven't seen anything like that.
Anything like that. No. But
and how long have you been registered?
Gosh, it's been mid 2014 is when I.
Ooh.
So it's been, but that those early years, and again, the benefit of having the separate account structure, you know, I only really started ramping up, call it 2018, and then I went full time beginning of 2020. So it's been kind of out there. It sounds more impressive. Oh, hey, I've been open since 2014, right? Again, I can,
it's
you know.
Still impressive, man.
What's that?
It's still impressive to me, man. You're doing great.
But it's crazy.
Although something crazy about you is you did say you ramped up in 2019, 2020, but then COVID happened. So you had the worst of luck, right? How did you, like, one of the hardest parts about this business is managing the people, the clients and stuff, and making sure that they're on the same page as you, right? So how was that during COVID?
Yeah, so it's a good question. I should start by saying, and I'll just take a step back. I should start by saying I am a terrible marketer. Self-promotion feels like, I don't know, for some reason I just have in my head that like promoting myself is like wrong or like dirty or something. I need to get out of that mindset. But where I'm going with this is, so I came from banking. I was a commercial lender. I had some, you know, call it 150 contacts or so, which I thought was going to be much more beneficial, we'll say, when I went out on my own. But I found when I went out on my own that it was vastly harder than I had ever imagined, even having this network in place. So the extent, if you're starting, you know, get those commitments up front or be pretty certain that you're going to have them if you need them. I mean, one thing I was trying very hard to do for as long as possible was not be in a position where I felt like I had to, you know, take on a new client that wasn't the best client to take on in order to get, you know, assets under management, earn a fee to put food on the table, basically. So having that, you know, I've heard a couple people say, you know, it takes 3 years, and that's probably right. But I went, that's what sort of led to Watchlist Investing. This investment newsletter was, I don't want to blame it on COVID, because I think I probably, if I was a good salesperson, I probably could have managed through that virtually. But the way I'm sort of structured things today is like, I'm doing the research anyways for my clients. And so I'm going to publish it through watchlistinvesting.com. the benefit of having some feedback, critique, and so forth. But that it's another revenue stream for me, so have a side gig, have a part-time job,
Mhm.
start it while you can. But what really helped, actually, one of my or two of my best months, I think, were March, April, or April, May. I think April, May of 2020, after that big market crash, were really, really good months for me. So I've been
Mhm.
kind of hoping for a market crash because they're actually, you know, one, they actually get people thinking about switching, and two, I mean, you'll sympathize with this. Being a value investor, it's like I get a new client, stocks are kind of expensive, including the ones that I have in some portfolios. I don't want to put clients in expensive stocks. So like I have sort of an on-ramp. I've talked to a lot of people about this, how do you manage this process? So a market pullback would be very welcome, I guess, and it would help you out too. And
It
plus
seems
plus
backwards. It's so true.
plus you look like a genius. I mean, gosh, the
Right.
investors that came in March of 2020 are like, geez, Adam, great job. And I'm like,
Right.
whoa, low expectations.
Yeah,
But
exactly.
so how have maybe just to sort of flip it back to you, Jesse, like how have you managed your uh future clients or prospective clients, or what are you doing in terms of marketing yourself, all that stuff?
Yeah. That first, I want to go back to the fact that you, I will say downplaying yourself, but being rational about it, feeling grimy about it. I think that's okay. I've always felt intrinsically, if you uh, are a great investor, naturally that reputation will be your sales manager. It's like the course I took said there's typically three roles that have to fit the investing firm. You have the investor, you have the compliance, and you have the sales guy or woman. And if you don't have the salesperson, your investing record will speak for itself. Eventually, people will find you. I think Monish Pabrai, or maybe it's Warren Buffett, says you can be uh, a leper in shark-infested waters, and if you have great returns, people will swim through them to
Mm,
get. So I don't think you're far off. Now, how do I manage the expectations of the people coming in after this massive 90% run in the S&P 500 in the past year or something? That is a very tough question. Um, and I think it comes down to having the same value investing quality, the patience, and the particularity coming with who I bring on, and making sure that they understand. I don't want to bring everybody on, but I do because I have to make you know food for the table. But I think it just boils down to who I can bring on that has the same values as me, and help them to understand where I believe the economy is and what I expect returns to be on. I think Charlie Munger says, "What's the um, best way to promote long marriage is find a woman with low expectations." So I just have to make sure that their expectations are real. I don't want to say you're going to get 1% gains or 0% gains forever, and then come up with whatever I come up with. I want them to be real, but I want them to understand that we've had this impressive rally so far, and I'm very patient, and I'll wait for the moment. If it takes 8 years, or maybe it takes 8 days, but it could take a long time.
so just taking a step back, have you, like, what sort of conversations have you had with friends, family, and so you can't market yourself until you're officially registered,
Mhm.
but the sort of back room, friends and family, what kind of groundwork have you laid to get to this point?
I think I fall back to when I teach people finance. I say you have to be willing to stomach a 50% loss as soon as the money goes in. And I try to provide the fact that valuations are pretty high, that debt's pretty high, that I expect that in the coming years we won't have the same returns as we have before. I can't promise a market crash, but I can promise that gains are going to be more modest going forward, and I present them all the data I can. I can't predict anything. It might run up 90%, sure, but I want them to brace for the worst I think I read this book one time called The Excellent Investment Advisor. And one of the best pieces of advice I got in that book was that you cannot predict what the next 100, 200,000 point move will be. But I can tell you when the next 10,000 or 20,000 point move will be. And which one are you more concerned with? So I can't tell you what's going to happen in the short term, but over the long term, I could be more confident in saying that we can get to here.
But you're talking to friends and family and for your future client base.
Yep. And I just try to keep things simple and honest. That's all. Just have the integrity and the foresight, I guess.
Well, that's great. I just thought of something as you were talking about starting up. Have you heard of Robert Vinal, RV Capital?
I don't think I have, Robert.
He puts out, oh gosh, I gotta find. I'll try to post in the comments. He put out like a memo, some thoughts on becoming an investment manager.
Is he based in Zurich?
Yeah, wonderful
guy.
Wonderful guy. Yeah, he's friends with a guy. So I just posted a link in the chat here.
Okay.
And interesting. I mean, he talks about. I'm just scrolling through it. He's like, do not bother marketing, which kind of speaks to your point of just sort of putting your head down and focusing on investing. But I'll say that's really hard to do, which I'm fortunate in having this other avenue. It's kind of you can be active in terms of research, but not active in trading. But it's hard. It's easier said than done, I'll say, is to sit there and not have any clients. You're like, well, geez, I've got this, tiny portfolio, but look at how good it's doing. So anyways,
the next thing would be to find somebody who is. Maybe you can find someone who's good and bring them on.
Yeah, that's true. There's been a lot of good duos out there. I mean, just in general in history, but that I find that so challenging, and it just one that ceding control to somebody else, but two, as having studied, what it takes to do this and all the rules and regulations, like, you can't, if somebody likes your post on Facebook, it's,
right.
What do they call it? A testimonial, and you can get in trouble for it. So it's so hard to do. So I don't know if you have any good thoughts on that for, even for me, a terrible marketer. How are you planning on going about marketing yourself?
I'm kind of fortunate. I'll ruin the surprise now, where I'm still doing air traffic control while I'm doing the investing firm. Air traffic control is a very unique job where you can't work more than 2 hours on position. You have to take a break, and what you do with the break is all up to you. So I'm able to kind of multitask more than a normal person would in a different job, which gives me a lot of leeway. I honestly will know more when I get to the position that you're in, and I'll take your word for it being harder than it's supposed to be. But my goal right now is to just invest the best I can and let the record speak for itself. I can understand where you're by yourself and you're relying on that income to be a lot harder. And this is where I want to give you all my money and just be like, you just be like, here, sustain yourself, keep doing what you're doing because you're doing great, and just support the heck out of you. But I know it doesn't work like that. So I think Lilu said that value attracts value, and that the people will eventually find a way to attract each other. I think it's only a matter of time.
Well, you actually have a great way of attracting clients. You just, hey, geez, if you want this plane to land safely, please let me broadcast to the cabin or something, or have the planes fly in a pattern that spells out. No, that's really interesting. 2 hour, which makes sense because you want someone that's totally focused. I mean, I want you thinking about nothing other than getting my plane down safely. I kind of figured that, but I didn't realize it was like that.
Yeah, it's a very weird job. It's a hidden gem among careers, I think.
Now, so it's almost for whatever reason it comes to mind, firefighting. They're on for a really short period of time and then they have to take a break. And a lot of them have second jobs, landscaping and, you know, carpentry or something, truck driving,
Piloting.
piloting.
Yeah, I know a firefighter pilot.
Oh, interesting.
Yeah. Yeah. But yeah, I mean, I wish I could help you. I hope, and I think it's intrinsically right for you to do really well and for it to come back to what you put out in the universe comes back to.
Absolutely.
And I think this is a testament. I mean, we have Andrew and Richard here listening to you. By the way, is Richard a mutual friend of yours? I recently friended him on Facebook. I saw you as a mutual friend. Do you know him?
Yeah, no, we've connected, I think on, gosh, I don't remember if it was YouTube first or Facebook, but he's just actually this weekend sent me some good tips on YouTube, and I appreciate Richard and you, Jessie, have helped me out immensely on YouTube marketing and all that, because I'm like I'm like an 80-year-old man. Some people say they're young at heart. I'm old at heart. I'm like, how do I do this? Um, it's anyways, yeah. So it's great to have sort of this community, everybody sort of in the same boat, or at least investors, right? I mean, that's just great.
Yeah. Yeah. So I think one of the other questions you had was, what do I think of aviation investing, particularly Buffett's investments in US Air and the like? And this is where I think you're going to chuckle, is that had I seen Buffett when he invested in those aviation companies, I would have done my best to convince him out of it. And I know that's hard to say looking back and knowing what happened. But me particularly, I don't invest in aviation securities, not only because I can't, because aviation air traffic control doesn't let you, or else you just shortcut all the Southwest aircraft kind of deal. However, they let you invest in the S&P 500, which is market weighted, but whatever, that's besides the point, and I understand why. But no, I'm not particularly interested in the aviation field whatsoever. I think there are bigger ponds for better fish, and if I had to, I'd probably go more the private route, so net jets, but that's already taken by Buffett, and maybe the government contractors like Leidos, Lockheed, Raytheon, and BAE. But yeah, up until recently, they were doing much better, but then COVID happened.
Yeah.
I don't think.
How about like suppliers? Like, is there a piece of equipment or software that you use that's like, made by a certain company that has a lock on the industry, like anything like that? Like, go deeper than just maybe the airlines or the manufacturers. Anything
Yeah,
that comes to
that's the
mind?
government contractors like Leidos. It's proven to me to be like a recession-proof kind of job and a gig that they have. It really boils down to what the government's willing to spend on the infrastructure packages. And I think once you're in, the switching costs are ultimately high. There's no, like what we have, for example, is the simulators that we work on, and they're produced by Leidos technically. So there is no way we are going to replace those simulators with the other ones because the switching costs are too large. And the people that are in there that are working have to be in there because they know the simulators. So it's one of those elevator kind of companies where once the elevator is inside, you can't get another elevator company to replace the elevator. So if I were to invest in aviation, it would be more in that.
Yeah, interesting. No, it's so fascinating, talking to somebody that's just inside of an industry, and it's like, well, this works like this, or no, this doesn't actually work like that, or, just all these little niches and particulars, I guess at every industry, but I'm looking at, we're kind of jumping around all over the place, but I think this has been a good kind of flow, Jessie.
Yeah, it's been pretty natural. I like that. You also asked if I had any other questions as starting these firms. I probably have a million, but nothing really burning at me right now. Like I said, I've been writing down the whole process and how everything's come to be. But one thing I wanted to ask you is, do you see yourself getting to a point where you want to start a hedge fund and marketing yourself more towards the qualified purchasers and the clients, or maybe going the Buffett route and becoming a CEO of a company? Do you have a next step?
Yeah, it's a great question. I mean, so when I started, I wanted to do the classic Buffett performance fee, 6% hurdle rate, 25% of profits. You have to be
The investors have to be
qualified investor to have that structure, and so that's why I went to this route of going just a straight percentage of management, basically open to everybody. But I have a tenure based track too. So if you're with me longer, you get the same amount as somebody else. But in terms of, so the hedge fund versus the separate account structure, the only real benefit to having the hedge fund is the ability to do other things like private businesses, some of these other sort of esoteric things. I mean, it's nice to have the separate account structure where you're sort of like, I tell people it's, Bernie Madoff protection, right? Like each account is insulated, not only from each other, but from me. I mean, I can't go abscond with somebody's money and go to, so, but sort of structurally and just sort of like from an investment standpoint, I don't really see any advantage to going the hedge fund route. I guess if I found a business, or I could always do something separate through an LLC. It doesn't necessarily have to be through a hedge fund. But I mean, I don't know. It's kind of it made me think of that question you get, when you interview or something. It's like, where do you see yourself in 5 years? And it's like, the short answer is, just doing what I like doing and looking at businesses, and whatever the structure is, I'll kind of figure it out at the moment. But yeah, hedge funds, separate accounts. I just had another thought here, but it's escaped me.
That's kind of how I roll. I just kind of do the best I can wherever I am now, and then when the opportunity presents itself, then I'll say so. I never know what's gonna.
Oh, you had asked about whether I want to be a CEO. What attracted me to banking originally was that you get to see, kind of like investing, you get this broad view of the economy and different industries. Like, I've never been someone that was like, hey, I'm gonna go open a restaurant, or like, I love, I don't know, manufacturing cabinets or something. Like, I've never been like, I like the breadth of things and the diversity and all of that, and figuring it out. I have kind of a, I don't know, call it backdoor way of scratching that itch. I'm on the board of two nonprofits. One is actually the largest private high school in the country. So I kind of get
Wow.
a little bit of that strategic sort of board hat. I get to put that hat on and interact with management and do that. So I get a little bit of that. I would love to serve on a private company, for-profit board, or even a public company board at some point. But I don't know. I mean, again, we'll see kind of where it goes. But I do enjoy that strategic seat, if you will, in terms of looking over the horizon, looking at major capital allocation decisions. Yeah, we'll see what happens, but we'll do another one of these in 10 years, Jesse, and we'll see where I am at that point.
That'd be interesting, huh? We're doing completely different things. Like, I'm in fishing and you're in, I don't know, just the CEO of a Fortune 500.
And by the way, I'm a big space nut. Aviation, is kind of I enjoy it, but I'm really a space nut. The Apollo program specifically. I'm in a weird position of like rooting for Elon Musk, but hating the stock.
I can do valuation, yeah.
Which, by the way, I did a long bet. I think I put that out there months
Oh
ago.
my
But
God.
I finally got a challenger.
No way. That's so funny. I've been trying to get people to challenge you this entire time. I'm like, that's so brilliant. I'm even making a YouTube video soon. That's going to be not against Elon Musk, but it could have been. I'm doing it against crypto, where if you were to dollar cost average into the S&P versus dollar cost average into, I think Bitcoin I'm going to do, that S&P 500 will beat them. So it was my way of doing a long bets like you are. So, I mean, what did they wager? Like, did they contact you? Like,
Yeah, so my thing, my bet. So this is the same company, which actually is funded by Jeff Bezos, by the way. I don't know if you knew that. I just found that out. It's called the Long Now Project. They've created this 10,000 year clock in some mountain. I mean, it's really cool.
oh, yes,
But
yes. Yep.
this is the same organization that Buffett placed his famous bet against Ted Seides, whether hedge funds would beat the S&P. So my bet is that the market cap of Berkshire Hathaway will be greater than Tesla on Warren Buffett's 100th birthday, August 30th, 2030. I finally had a challenger, and I love this. The guy is actually from New Hampshire. He doesn't live in New Hampshire anymore, but he's from New Hampshire. So I'm going to try to get some local press for it. But the organization that he picked, so we're going to do a $250 bet. The organization that he picked was, I think it's called 350.org, which is basically an organization supporting the adoption of electric vehicles and climate change, which I'm completely for. I mean, I think there's no losers in this, but I think it's going to be really fun to promote. I just hope everybody that owns Tesla is only doing it in a minor way, because I just can't see that. I can't see that company earning its valuation.
No, one of my favorite videos of Warren Buffett is when he talks about reverse discounted cash flows. And I think one of your friends, man, his name's not coming to me right now, but he did a reverse discounted cash flow of Tesla. And it was remarkable to see how far off, how much they need to achieve by how fast. It would be pretty lucrative.
Oh, even I think you're referring to when Buffett talked. He was like the .com boom, where he said, hey, for it to be worth this, it has to earn 50 billion next year, and
yep,
crazy. Even when people
James
assume
Russo.
all these, what's that?
That's it. James Russo. I don't know if you know him or not, but he's got some kind of blog that he writes in, and I love listening and reading to what he has to say. And yeah, he did the reverse discounted cash flow of Tesla, among other analysis, but I thought it was remarkable. Crazy. And that's another space in aviation I won't touch. Those rocket launches and stuff, I won't go there. Supersonic aircraft, won't touch those either. Nope.
Yeah, I haven't even looked into that whole business.
Mm-hmm. So what are you working on now? Are there any projects? I know there's a stock you recently started investing in. I don't know if I should mention it or not, but I've read the read up on that. It's pretty good.
Oh, you're talking. Well, yeah. I mean, even including all of my clients, I'm not a market mover, so I'll talk about it a little bit. Yeah, Boston Beer, right? That's the one you're talking about,
yep.
Sam.
Sam Adams.
Yeah. You're on my full list, right?
I'm not on the full list.
Oh, I gotta
changed the
send you that.
website and launched it. I thought it was like a giveaway, so I read it, and they were like, "Sorry guys, but here it is for free." And I was like, "Oh, I shouldn't have read this, I guess."
Oh yeah. I know. I did an oops there. I imported some content. I imported people to MailChimp, and it automatically sent everybody a welcome email, and I was like, ah.
Yeah.
So
yeah,
you're gonna make mistakes, But no. So okay. So you read it. No, I'll put you on the list. That's the paid one. Yeah. I don't know where were you going with that?
I was just wondering what you're doing now as an investment advisor. Any projects? I know that you recently invested in this, so you went through all the work and probably is still monitoring it, and it's on my watch list now.
Yeah, and the whole genesis, the whole idea of watch list investing was, it's so hard to find good businesses, and it's exponentially hard to find those good businesses and have them cheap, right? Like, what are the odds they're going to line up at the same time? So my whole thing is to look at good businesses, find good businesses, and then put them on a watch list, and then wait until they go on sale. I've looked at companies like last month. I don't know if you read the one on the waste management industry. I mean,
Yep.
I came to the conclusion they were overvalued by like 5x, but I still thought it was worthwhile when I got done with it to do the analysis. So Boston Beer was probably the first, except maybe Hingham, the first that actually sort of lined up where I said, hey, I'll buy some of these shares, and it's a good business, no debt. It's not a cinch. I mean, they're certainly contingent on executing in the future, but it's a really good business.
Yeah, it definitely looked like the example of a wonderful business at a fair price. I really like that write up. And everyone listening, either now or in the future, should definitely subscribe to that, because I found some incredible market gems in there. And I think you even, in the first one that you give away for free, mentioned Bruce Greenwald's evaluation method. And I haven't the chance to read his book yet, but we're going away on a trip and I just bought his book. So I'll be reading that one. And I'm super excited to go through that.
Yeah, you're got it close here. This one, right? Value investing from.
Yep.
I cannot recommend this book enough. I really think it's as if Buffett gave away his formula. Like, I don't want to. It's almost that good. Like the way he approaches the problem of discounted cash flows and how to think about. I mean, Greenwald gives you a mathematical approach to sort of thinking through different businesses. And there's I've got a couple other of his books on the shelf. Competition Demystified. Definitely read that one.
Oh, I was looking at that one and I decided to just get the value investing one. But now that you said that, I'm going to have to get Competition.
No, you definitely need to read that one.
Okay. All right.
But this one's the recent, he just came up with a 20-year, a second edition, and it's an updated version. And he uses some of the same businesses and he gives an update on them, like, WD-40 and this Magna International, Intel's another one. But what's great about this one, and I used this framework to look at Sam Adams, was this whole idea of using the Ben Graham value investing approach applied to growth stocks. And it's just the framework that it just clicks. And I think it'll click for you. And I think for the 3 people listening, my fault, not yours, Jesse.
No.
Definitely read that book.
That's awesome. Yeah, I can't wait to get my hands on that. And now Competition Demystified. Yeah, I have so many books I'm reading right now. I just found an English version of Lee Lu's book, so I've been going through that. I talked to the publisher. I was like, "Yo, can I get an English version?" And they said, "No." I mean, you've written a book and you have it translated, so I don't know the process. But they said usually another publisher reaches out to them, I think, and tries to get it translated. So I'm gonna have I want to reach out to them, because Li Lu is the reason why there's an Chinese version of Charlie Munger's Poor Charlie's Almanac, and I wanted to see if I can get Li Lu's book translated to English, because it's been remarkable, at least the summary that I have so far, and I think it would be wonderful value for people.
Do you know what you could do? So yeah, just a little insight into the publishing world. So my book. And I'm going to post a link to, there's some great Bruce Greenwald lectures on YouTube. Definitely check those out. So Harriman House published my book in English, obviously. And then we had a couple so the way it works, there's other publishers will reach out for translation. So like they put it to a market and they say, okay, I think they have like a catalog, a virtual catalog. Here's all our books. Other publishers will look at it and say, okay, like we're getting it translated into Korean and Chinese. So it's a separate contract with that publisher for just that market. And then we just got one for it's going to be distributed in India. So Harriman House has an agreement or has an in or connection with HarperCollins to distribute just in India.
Okay.
So you could, but here's, speaking of Peter Kaufman, have you seen his Redlands talk?
Peter Kaufman and Redlands?
It's like Esri or something. He talks about, anyways, he talks about this book, but Peter Kaufman bought every single copy on Amazon. And then he bought the rights to the book. And where I'm going with this is, see if you could buy the rights to Lilu's book and then have it translated and sell it.
Whoa.
Sell it in the United States. That could be a little business.
That's how I get my side pot revenue while I'm doing the investment advisory stuff. You have to watch us invest in, and I'm over here buying every single book there is. Man, that's pretty clever. I didn't know about that.
But yeah, there's some really good stuff. It's just incredible what's out there on the web. And yeah, Lilu is great. He's got have you seen his talk at Columbia? I think it was Columbia.
About 92 times, 93 times.
Okay, so not 100. You know,
no, I still got some more to go.
Yeah, that's
and every time I'm learning something new. Yeah, it's a good one. Yeah, and I've actually listened to the Bruce Greenwald one too. I really liked his lecture, and I think I sent that in an email one time, and you've clearly listened to it a couple times, and I recommend all the people watching do that too. But I also heard another one where he said, you have the first edition, right? You don't have the second edition?
Of what?
Of Value Investing, the book?
No, this is, I've got both. So this is the second edition, but I read the first one.
Yeah, I thought you had the first one, and I was remembering him saying that he didn't like the first one. That like the first one was all garbage examples, pretty much. He like trashed his own book, and then he said the second one's better, and I was like, okay, well, I guess I'm getting the second edition.
He uses some of the same companies, and there's but I think it's really good. It's really good. It's just logical, well laid out.
That's awesome. The last thing I want to talk about, I guess, is just to keep it on the topic of investment firms. How did you decide you wanted to charge the way you did? It's the weirdest thing, right? Like what's your fee structure going to be like? You're like, obviously I want to give it away for free, but I have to make some money. Like, I thought you had a really good way of incentivizing people in the right ways. So
you're talking about my investment management fee?
Mm-hmm.
Yeah. So, and I haven't seen this anywhere, but I was thinking through, again, I wanted to have, in an ideal world, any investor could pay a performance fee. And you'd have it, the Buffett approach of some sort of threshold plus a percentage of profits.
Right.
But my fee structure starts at 1%, goes down to 0.5%. I think the top tier is 2.5 million. But then sort of right next to that is a tenure-based fee structure. So if you've been with me 10 years, but you only have 100,000 with me, you get that same 0.5 percentage point fee, because it's what I would probably want if I was on the other side. If someone, and it scales, it goes up to 10 years. But it's a way of rewarding clients for sticking with me. As time goes on, you get to know clients, they're going to stick around. There's less work related to them. Their account is, if you're doing a good job, is probably going to grow over time. And so it's just sort of a way of incentivizing and structuring something the way I would want it and would like to see it if I was on the other side. So I have not seen it anywhere else. I actually sent a little note to Jason Zweig at the Wall Street Journal. I said, hey, look at me. I'm a little bit different, because I think he had an article about it maybe a year ago about different fee structures, but I haven't seen a response from him or I haven't seen anybody else do it like that.
What was did you reach out to the Wall Street Journal and try to get something published, or was it Value Investors Club? I think you told me.
I did have a piece. I had a quote in the Wall Street Journal. They reached out to me. But you're talking about Value Investors Club when I try to submit a piece.
Oh yeah, was that Boston Beer Company?
No, but I was thinking. Thanks for reminding me. Thank you. I think I might submit that because
You
the
should.
one I actually submitted was Hingham Institute for Savings, maybe
Another good one.
2 years ago, and it's run up in price since then. But I don't know what they didn't like. They didn't give me feedback, but
No, they don't. That's the most disappointing thing. All right, yeah. I think that's it. I want to thank you for your time, unless you had anything else to say. But just as a wrap up, where can people find you if they want to see more?
Yeah, I've been on Twitter a lot lately, BRK_student, or watchlistinvesting.com, or YouTube here. I think you've got a link in the description below, but the Oracle's Classroom, lots of free goodies there on Berkshire Hathaway. Definitely check that out.
Cool. And I'll add all the other links to the description below. Adam's going to have the same video on his channel. He might do edits. I don't know what you're planning on doing, or you might not. I don't want to pressure you into anything, but I'll put as many links down there as I can. And thank you everyone for watching. Thank you, Adam, for your time.
This has been great, Jesse. No, I'm gonna ride your coattails. I'm just gonna upload it. You're gonna do such a great job with the description, with chapters and everything. I'm just gonna copy and paste that.
Shameless cloning. I love it. All right, guys. Thank you so much.
Thanks, Jesse.